The bear has just got bigger. We're coming up to the month end. The indexes have gone precisely nowhere for, well, just a few days this time, but we're into weeks if we look at the slightly bigger picture. And that's exactly why I've just added to my position. So what do you do when nothing moves? And most traders try and force something. And as premium sellers, we want to do the opposite, or perhaps more accurately, the inverse. We're going to sell premium. We get paid to wait. A directional move as a bonus. It means we get paid faster if we get it, but we don't need it to make money. So what we're going to look at today is a flat chart is still a trade. The 2x add-in that we're looking at the market open, and crude oil's finally finding its floor after the bears get gobbled up. So let's get into it. So the overnight print on the futures, again, we can see the S&P, the top left there. We've got yet another inside bar, and as we're speaking quite a lot about at the moment is these inside bars. We've seen several over quite literally just the last 3 in the last 7 days. The high breaks and then the market moves in the opposite direction. So that's what we're looking at right now. We've literally had, yesterday was a narrow ranging and inside day, and the overnight high has been breached. We've got another narrow range there. I mean, we've got with the Russell futures, which is the other index that I actually like to trade. We've got inside day, narrow range, another narrow range. And, you know, the highs are broken and then the market moves in the opposite direction. It's going to become clear that we're trading a range in just a moment, but these inside days are quite clear to see when we drop down to a lower time frame. VIX, very similar to Monday, remains elevated. It looks like this trend line, it's rare that we get a chance to actually pop some trend lines on the VIX. We were able to do that earlier on in the year, but this volatility and elevated premium, because that's really what it's telling us, the premiums are richer at the moment and they're staying more expensive because there's a little bit of elevated fear, probably on the put side. People are buying insurance and just trying to, and that's being factored into the market. Gold is, again, I've updated my consolidation. It's still a consolidation. Probably got a sloping high if we think about that, but still waiting for the breakout here. Again, benefit of hindsight, I really should have done what I normally do with ranges, which is trade the range, but it's easy to do and say these things with hindsight. We did get that on Bitcoin, but it's just grinding out sideways. We're not really seeing that push lower like we anticipated, at least not just yet, but we might have some alternatives in the future. And crude oil we'll look at in more detail in just a moment. Anyway, let's get on to SPX. I've highlighted the consolidation. We've been talking about this and it was very similar. It's just off the left of the charts, but it was very similar to the 17th of April. We commented on this multiple times on these videos, updates, and the daily blogs. And we had the drop lower, we had the bull setup, and we were expecting price to grind sideways 1-2 days. It was looking like, with the gap high, we might get some more excitement, but we are literally just chomping sideways in that range. The Bollinger Bands are now flatlined. They're going nowhere. We have had an updated bear signal. It's not a new one because we were already bearish, but that's been updated. Software's telling us this is actually a double opportunity or a 2x opportunity. It's a premium setup. It's actually one of the better setups that we can get, and the profit factor on just these trades alone is 2.62. So again, we've got a high quality setup. Again, we can really just look at the from the 6 money making patterns point of view. We're trading from the range high to the range low, and the setup, software often picks setups. I'm actually going to hard code the range assessment in. It's been on my to-do list for a long time, so that'll be hard coded in. So the full range of the 6 money making software should be doing it for us. Very similar story over on Uncle Russell. We've got back again, patterns within patterns. Again, we've already got one consolidation here. We've got another overlapping consolidation. Have had technically a fresh bullish setup, but by the time we've had tagged the lower Bollinger Band, we've had the setup, we're at the upper Bollinger Band, and again, we're in that consolidation. So a little bit of common sense here. I'm going to just delay my trade entry on the bull side until we're above the range. Again, standard stuff, breakout pullback, part of the 6 money making patterns family. wait for that to ultimately happen. As such, I'm still bearish on the bear signal. Again, it's grinding sideways anyway, so I'm still getting paid. I'm just waiting for the premium to come in and give us some. Over on crude oil, we've finally got the floor. Looks like it's in. We've seen the market just sell all the way down to the last VWAP. We were in that $80 zone. We just popped lower quite sharply, and almost immediately and overnight, we've seen price gap higher, trade higher, develop a little bit of a bull flag. And since I've actually taken the screenshot, we're actually seeing this swing high be breached. So we'll probably see price just push back higher. First target would be the gap lower, so $89, $90 seems fairly reasonable. The sloping trend line here is over on the daily chart, so just come back up to that trend line there, and that does seem to make sense as just an interim target. Again, we're already pushing high. Anyway, the bears have been gobbled up. I think that last push lower was just getting the last of the late trade. And to be fair, we were speaking about it yesterday. Is this going to be the turn? Is this going to be our evaluation point for the bears? And a lot of people were probably looking at that, multi-day sell-off. We're going to go back and retest the lows down at the $60 level. So gobble. The bears have been fooled in, and just a little bit of patience on our behalf. Assess and read the situation. It's a dip buying opportunity until we have new information to assess. And all those late bears or break-even bulls, should we say? Go back to the charts. All those break-even bulls could easily have been just stopped out. Because anyone who's still long and bullish from the bull flag over here, they're going to have their stops in this zone anyway. So they've just had their the last of the hopeful bulls have just been dinged, and the bull, the real bull move can perhaps start in. Anyway, gobble, they've been dinged. Let's look at again, not necessarily the Bitcoin chart, but the total market cap. So this is pretty much everything. It's kind of like crypto's version of the stock index. Just basically everything just thrown into the total capitalization. So basically, crypto is completely frozen. Again, just illustrates that there's nothing really going on. Again, crypto's the kind of big top. It's very similar, unsurprisingly. But whether you're looking at the kind of the leaders, the cryptos, the Solana, one or two of the others, it doesn't really matter which one of the names that I can remember to look at. We're still looking at kind of a sideways market. I don't have a solution for this. Again, it wasn't my solution. Again, crypto's not my main thing. I am a crypto newbie, essentially, but a chart is a chart. And, we trade it like any other thing. It's a visual representation of crowd psychology is a phrase that I often have said and just reminded myself again. So, if an index or a market is chartable and tradable, or if it's chartable, it's tradable, because, again, it's just human behavior in graphical. We'll have a solution for that tomorrow. We've got an alternative to trade that's not necessarily a shitcoin or one of the other bullshit fads. Again, kind of like in the stock market world, it's not a penny stock type thing. What probably is, I suppose, it's low value, but it's just an alternative that is actually moving. And so we'll look at that tomorrow. Quick shout out to the Wall of Winds. Again, well done yesterday. Personally, I was away from the desk for a lot of it yesterday. I was around about the market open, and then I was doing other things for the rest of the day. So the community has landed the plane on this one. Again, multiple trades, 10 win posted, 6 on the boards, 30 to 70% returns, paying on 2 instruments, the usual SPX and Russell trades. Not necessarily a clean sweep, again, and this is an honest version, so well done anyone for posting the unsuccessful trades as well. So well done. It keeps you honest, keeps you clean. There's lessons to learn from them as well. So again, well done. Just taking a look at SPX, the main vehicle that we use, we can see that we've got the standard breakout trade. We had a bull. It was a lower quality setup, half position size type of day, but you had that standard breakout pullback continuation, then pretty much just grinded sideways. What we can see is that range overlaid on the 5-minute chart that we looked at on the Tagata. We've essentially gone from the range low to the range high. So I would imagine with this range, that's going to roll into today's session. So we'll go from the range highs to the range lows. The caveat being, unless something new happens, happens, something new being a breakout. So again, well done everyone yesterday. Again, Mary, Reddy, Bill, Greg, Don, Chris. Again, if I've not mentioned your name, nothing personal, unless it is. You'll never know. If you don't let me know, I can't shout out. So well done everyone. There's the wall of wins from the community. So again, fabulous work everyone. Now Chris T did make a notable mention here. A loss on Rut and a winner on SPX, small net down on the day, then he stopped. And that's not necessarily a losing day, that's following the process. So, you know, we're going to have winners, we're going to have losses, we should have more winners than losses. Obviously, that's a positive expectancy strategy, but just not chasing back to make the loss. So again, well done, Chris. Discipline being followed, so you're on. You get the trophy slide today. So absolutely awesome. Here's a fun fact: the Bollinger Bands were built because John Bollinger thought that fixed bands were actually useless. So basically, in the early 1980s, and the entire reason that they exist is that he reckons that fixed width trading bands were useless. And at the time, there was a lot of band type trading. ATR was used quite a lot. Keltner bands were around the same time. And John Bollinger was looking for something a little bit more dynamic rather than static, which is one of the reasons I like them. I like that dynamic, you know, rolling, almost support and resistance. They kind of become a self-fulfilling prophecy. But at the same time, you know, if the market moves too far too fast, then it kind of reverts to the mean. And again, we use it a lot in our, certainly the tag and turn system. Anyway, he basically keyed the bands to standard deviations to let them tighten or widen on their own. And that's what we noted earlier on. The market was compressing, price action was contracting, and the Bollinger Bands were also reflecting that. So if you short prior to those Bollinger Bands contracting, then you get that visual cue on the chart. The Bollinger Bands are narrow, they're flat. The band width is quite narrow, so you know we've got to be in a consolidation. It just confirms what we're already reading. So again, it's a great tool and a lovely assist from our point of view. Anyway, the backlines are flatlining. It's not telling you that we've got direction, we've got a range, and again, as premium sellers, we can take advantage. So if you want to learn more about how to collect morning income or collect weekly income, go to antivestor.com or click the links in the description, and there's a little bit more information about all the tools and the systems that I talk about on these slides. So that's it for now. Happy trading. May your trades be smoother than a cashmere codpiece. And remember that we're not smarter than the system. We have rules to follow for a reason. That keeps me sane. It keeps me on the right side of the profit and loss ledger. And I'll see you at the same time next time on the next installment. Probably tomorrow. Bye for now.